Hello everybody, Corey Kurkowski here with the Kurkowski Group. Today I'm excited to tell you about a new program called SmartBuy that was unveiled earlier this year by the Illinois Department Housing Authority, otherwise known as IDA. SmartBuy is a program that will allow borrowers with student loan debt to pay off their student loans up to $40,000 or 15% of the purchase price, as well as provide them $5,000 in additional down payment assistance. How does this work? Let's take a look. Okay, so you're excited to hear about the SmartBuy student loan program that is provided by IDA that can help you pay off some of your student loans. I wanted to go over some of the main pressure points that may keep you from being qualified for this program. First and foremost, the loan must be in your name. It can't be in a parent's name, can't be in a child's name. It has to be in the name of the person that's actually purchasing the house. The student loans cannot be in default or collection status. If they are, they're going to have to be brought up to date. They are allowed to be in forgiveness or in a grace period. That is not an issue. The biggest part, and I think going to be the biggest hindrance on people's ability to qualify for this loan, is this next bullet point, which is that the loans need to be paid off in full. So if you're getting a grant for the max amount, let's say, of $40,000, so the $40,000 grant, you owe, let's say, $60,000 in student loans. What they're going to do is they're going to cover obviously 40 grand of that, which is leaving you with $20,000 left in a balance. Now they won't let you close on this loan unless this is paid in full. So at closing you'd have to pay the $20,000 balance in addition to closing cost and down payment. So I could understand how a lot of people wouldn't be able to afford to cover that difference. And if that's the case, then this loan might not be right for you. Lastly, as mentioned, it does have to be a purchase. It does not have to be a first-time home buyer purchase. It can be any purchase. This is not a first-time home buyer program. Lastly, the student loans need to come from a accredited university, so that has to be verified with IDA. Typically, school transcripts will suffice for that evidence. If all of these bullet points don't affect your ability to qualify for the loan, let's go over to the next thing to see how much you're actually going to qualify for in regards to a grant. First and foremost, the max amount that they are going to provide is $40,000. So if you need $60,000 to $70,000, you're not going to be able to get that because the max that they're going to provide is the 40 grand. The next thing they're going to look at is your student loan balance. So if you owe $25,000, and that is 15% of the purchase price, then that's the max that you're going to qualify, which is the $25,000. And then obviously the main factor is going to be the 15% of the purchase price. So if you are buying a house for $200,000, we're going to multiply that by 15%. $37,500 is the total amount. The first thing that they're going to do is they're going to say that it's below the $40,000 max. Then they're going to check the student loan balance. If the student loan balance is $25,000, then that is the amount that you will be qualified for on the grant. However, if the student loan balance is $45,000, then this is the amount that you will be qualified for on the grant. And that's the simplest calculation. They're going to multiply it by 15%. That's what they're going to be doing. They're going to decide whether or not they're going to multiply it by 15%. You have more or less student loans. They're going to decide whether or not it exceeds this $40,000 amount. And then they're going to decide whether or not the loan amount that exceeds the $40,000 is the purchase price. The loan amount that exceeds the $40,000 is $6,000. The purchase price. That's what's going to equal the $40,000. That's what's going to equal the $40,000. So if you're buying a house for over $266,000, then you'll get the full $40,000 max. $66,000, then you'll get the full $40,000 max as long. All right, let's talk about the forgiveness of this program. You will need to wait through 3 years or 36 payments to be completely forgiven. 36 payments. All right. Now you are allowed to sell the house before or refinance before the 36 payments. What they're going to do is they're going to prorate the amount, and that's going to come due at closing. Whether you're selling or buying, you're going to have to pay that. That's going to come due. And you will also, a caveat to selling, you will need to be selling to someone who's qualified for IDA. So they also have to meet the IDA calculations. So that's really a tough thing to do. My best opinion for anyone who wants to do this program is to just make sure you're going to stay in the house for 3 years, because you're going to have that total loan forgiveness and you're not going to have to worry about paying it back at that point, because you're going to be signing a promissory note for the 36 months, and that is going to be prorated, and it's really going to cause a bit of an issue trying to find an IDA borrower when that time comes. So last but not least, the down payment assistance is provided on this loan of up to $5,000. This can help again with down payment assistance. It is a deferred $5,000, meaning that it will need to be paid back at some point, whether the house is sold or when it's refinanced. So this is great for people, and it's not a necessity on the SmartBuy program. You don't need to take the $5,000, but it is provided if people don't have the assets to put down. So it is a good help for them. That is the nuts and bolts of these programs. If you do have any questions, feel free to reach out to me at the link below. You can download my app or give me a call at 815-514-5511. Thank you.